there are a lot of psychological obstacles for why Wall Street hasn't adopted Bitcoin in a larger way and regulatory. I'm not going to walk through these in any particular order, but when we first started looking at Bitcoin, we were met with tremendous backlash. Our firm at the time was basically 99% institutional. So our business was purely with hedge funds and asset managers. And they were angry at us for a couple of reasons. One is that Bitcoin had a tainted reputation in their minds, that it was only used for drug dealing and dark web and people who want to avoid taxes. That has statistically been proven to have completely flipped. Whether you look at on-chain analytics, but over 95% of all Bitcoin activity is pretty legitimate movements of money. And the second is many people can't get over the idea that Bitcoin is based on what they call nothing. And what they mean by that is they can't get their arms around the idea that Bitcoin is based purely on trust and the cost of actually in maintaining that trust, which is the block reward. And that's what makes Bitcoin expensive, is because you're doing this huge computational hash that's very expensive and it's protecting the blockchain. But then these same folks who actually say they cannot own something that has no value gladly trade credit default swaps, which are gambling bets on the creditworthiness of a bond. Most people think the bond market is this gigantic machine that is based on people buying and trading actual bonds of different companies and governments. That's not true. Most movement and trading of bonds takes place at another level, which are essentially derivative exposures of the underlying bonds. It is over 100 times the actual trading. Cash bonds barely trade anymore. And then someone say, well, the dollar, of course, is backed by the government. So why would you even want to own something that has no protection? Well, first of all, keep in mind, for every dollar that's used for US GDP, which is about a $30 trillion economy, the US dollar is traded almost 1,000 times as speculation on price. So the dollar is a huge speculative instrument. And will someone say, well, oil is a true commodity because you buy it and then you use it at the pump. So if Bitcoin's a commodity, oil is anchored. Well, reality is 80% of all oil is bought by refiners and then it's turned into gasoline. If you look at oil trading on futures markets, that is over 400 times the amount of activity on actual reserves. So almost everything that can trade on a digital exchange is now an instrument of speculation. So that's crypto. I don't think it's anything different, except you're actually trading trust. The third reason people don't like Bitcoin, and sorry for this long-winded answer, is that other people got rich and they can't stand it. And that is probably one of the biggest arguments. I can't tell you how many fund managers said that they were enraged that their son bought Bitcoin and made a few $1 million, or their neighbor suddenly paid off all their debts and mortgages and they got fantastically rich because they bought Bitcoin in 2010. It makes people so mad. It reminds me of how people hated Netflix because they said it was a dumb retail stock, or people could not stand Tesla. They said Tesla is the biggest cult stock they've ever met. In fact, if you look at all the stocks that have done really well today, they've all been stocks that retail discovered and now institutions understand are actually good companies, whether it's Palantir or NVIDIA NVIDIA had institutional backing. And then finally, of course, there's regulations, because as you know, governments have been pretty hostile to Bitcoin and actually for the last few years even tried to essentially restrict its ownership in the US. And the banking system views it as a huge threat itself. So I think the financial industry itself has to come to grips with that. Bitcoin is an important way to re-engineer the financial system, but it's a threat to a lot of parts of it.